Now, these two new requirements are going to pertain to both types of programs, annuities and custodial accounts. In the annuities and custodial accounts, we are going to require form language as to compliance with what we call the required minimum distribution language of 401A9 of the Internal Revenue Code, as well as containing language that satisfies the incidental benefit requirement of the Internal Revenue Code, should the annuity or custodial account offer an incidental benefit. What is an incidental benefit? Such items as a death benefit, a joint and survivor annuity, a disability benefit. If the program doesn't have a benefit that's incidental to the main purpose of retirement, then they don't have to be concerned about this. But if they do, the language and operation and the form, of course, of that benefit, that incidental benefit, has to meet the incidental benefit requirement, and that is to say that, of course, the primary purpose of the benefit under 403B is for retirement. But those are the two new form requirements that are being put on 403B, and they will exist in parallel with the written plan requirement under the regulations.
Bob, that was very helpful. Could you talk about some other regulatory highlights?
Absolutely. As we continue, one of the items that the regulations recognized is vesting, and that is to say where an employee is receiving an employer's matching contribution or an employer's discretionary contribution, it can be subject to a vesting schedule. But I must emphasize this is for non-elective deferrals only. Non-electives. Elective deferrals, of course, have to be 100% and immediately vested. Now, one item that the regulations go into, which is extremely important not only for sponsors of 403B but for participants to know, is what we call elective deferral ordering, and I'll take a moment to explain that. This year in 2007, we know that the basic limitation, and this is found in section 402G1 of the code, for elective deferrals, that is the amount by which you can reduce your salary for a deferral to a 403B, is $15,500. We know that if an individual, certain individuals who have worked for 15 or more years for certain organizations may experience an additional elective deferral of up to $3,000, which we'll discuss in depth in a moment. And finally, if an individual is age 50 or older in the respective taxable year, 2007, for example, they would continue to have another addition to their already discussed elective deferrals of $5,000. So, for example, for the 2007 year, an individual could have as much as $23,500 of elective deferral salary reductions for contributions to their 403B. Now, what's very important about this is the ordering in which these elective deferrals go. For example, if our agents were conducting an examination and they found anything in excess of the basic limitation in this year of 2007 of $15,500, they would immediately default to the additional $3,000 catch-up to see, A, if the type of organization that's sponsoring the 403B is one that could offer this catch-up to their employees, and B, if the employees have worked for that organization for 15 or more years to entitle them to receive this catch-up. Catch-ups apply to organizations that are in education, that are in healthcare, that are in religion, home health service agencies, adoption agencies, those type of organizations. And if an individual has worked with that employer for 15 or more years, they may be entitled to this additional $3,000. Now, when I say may be entitled, individuals have to understand that this $3,000, which could go on for up to 5 years for a total of additional $15,000 of contributions with that employer, have to work a formula to see how much of this additional $3,000 they may or may not be entitled to. It may be the full 3,000, it may be a portion thereof, or in some instances it might even be zero. And of course, we have examples in the regulations that show how this catch-up works. What's important to understand, and too often what happens is individuals think it's a flat $3,000. That's not so. It is the subject of a formula. Again, that formula can be found in our publication 571, which is accessible online at the IRS website. Now, when this formula actually is gone through, it will show how much an individual is actually entitled to for this special catch-up. But again, the ordering is important. First, the basic limit, then, if applicable, and if one is entitled to it, the additional $3,000 or portion thereof catch-up, and finally, the age 50 or older catch-up. Now, in addition, 403B is very, very unique. When we talk about elective deferrals, we talk about a limit within a limit. Elective deferrals are the amounts that you could contribute pursuant to your salary reduction agreement for contributions to the 403B. However, remember, a little bit ago I explained that a 403B is a defined contribution plan, and as such it is subject to what is known as the overall limit, which is the lesser of 100% of an individual's includable compensation, or this year, 2007, $45,000. This is known as the overall limit. If, for example, an employee maintains several what we call qualified plans described under 401A of the Internal Revenue Code, then they would have one overall limit for these defined contribution plans, no matter how many plans they actually offered their employees. And this is where 403B is somewhat unique, because even though it's a defined contribution plan, in most instances, its overall limit does not coordinate with the overall limit of any other plans that would be qualified plans described under 401A that might be maintained by that very employer that offers the 403B, which effectively means that you would have two defined contribution plans. If the limits didn't aggregate, then an individual would not have one overall limit of $45,000, but potentially two limits of $45,000 with an overall limit combined of basically $90,000, which is a heck of a lot of money. This is known as disaggregation in the 403B world. That is to say that the overall limit of the 403B would not necessarily, in most instances, coordinate with the overall limit for the qualified 401A plan. This is, again, a unique feature of 403B and extremely, extremely important to understand should you sponsor several plans of the defined contribution variety on the same platform. Now, one more point I want to make that's extremely important, not only under the regulations, but for individuals to understand the type of opportunities they have into contributing amounts in their 403B by elective deferrals after they've left service. For many, many years, people have asked us, and they have said, well, I have a salary reduction agreement, and I've been contributing to my 403B quite dutifully for years pursuant to that salary reduction agreement. However, I'm leaving service. Let's say I'm leaving service on June 30th. And I know that I'm going to receive some checks after I leave service. Those checks, for example, could be attributed to, just the catch-up of my regular pay period. Maybe some overtime, maybe bonuses, maybe even a back pay award. I'm going to receive that check a period of time after I leave. I work pursuant to a collectively bargained agreement where my employer has promised to pay me in cash any unused but accrued vacation or sick pay after I leave. So I'm going to get that check after I leave. I'm not sure if I'm going to get it 2, 3, 4, 5, or 6 weeks later, but I know I'm going to get that check sometime.